How are you? Market Sniper here. It is Friday. Yes, hit the like if you're happy it's Friday. Every day feels like Friday for me. I'm kind of lucky that way because I'm doing something I love and I'm sure what does it mean? This is a special Friday. It's non-farm payrolls Friday. There's a couple of things that happen on that day. Yes, so the people that like to tell you statistics and other lies are going to come on and tell you how many jobs have been created in America. One of the key economic indicators, highly politicized, manipulated birth date number. But it is an important Friday because right now the dollar is gaining strength. The dollar is gaining strength. The bonds are losing value. Remember that huge debt bubble? We keep telling you it's always been a bubble about debts. It's not a crypto bubble. It's not a gold bubble. It's not a silver bubble. It's even not an equities bubble if you look at their relative valuation as we did yesterday against the balance sheet's expansion of the world. It's actually a debt bubble. It's a money creation debt bubble. You create a loan, you loan money into an existence. That's what it's all about. Big day today. So what do you get? It's one rare opportunity where you can come and interact with us on a more personal, intimate level, more and very different to these kind of streams. Because instead of just being top down and me giving you broad strokes here, you can do a number of things. You're going to get the best analysis, technical analysis. Yes, using our bespoke hunt volatility funnel method, you'll get a little bit of a peek about how it works and some of the things it does, although you'll need a lot more training to be super competent in it. For that, you can book a call and have a chat. But pop on the non-farm payrolls and you will get both the traditional markets and you will also get the live trading day aspect of it, where we are looking for trading opportunities. So you get a chance to trade with us. We sometimes enter certain trades and you'll see how, why, where the stops, the placements, the entries, all the detail. So it's not just an event on the calendar for the Americans. It is also an opportunity to trade with us in either the traditional markets. Sometimes the trade may come on the crypto. It might come on both. It may come on neither. We don't trade just for the sake, but you can see what it means. We'll certainly analyze and look at certain trade possibilities. That will all be happening today. You can grab the link and you can pop on. What else will you see that's of great use? You can see why we won't do a trade, but we'll look at one. So you can see how the whole selection process for actual trading. None of this is done on the live streams or the YouTubes. So that's where you can get a little bit of a look-see. It's your best chance to see what it might be like to be a member in our community for a very low amount. We know that there's a lot of dollars around, so anything below $200 is barely a good meal out. It is exactly that. And in fact, you can get 3 visits. You can have a number of tries for the price of 2 as well in that package. Plus, you get the recordings for 30 days. You can watch and see how it turns out. You can see how wrong and right we are, how things go. We leave them things up there. They're always there to be seen again. You might be busy, rewatch. You might want to see it again, rewatch. So for 30 days at minimum, if you take the 2 package, you'll have even more days to watch all 3 non-farms going for an entire quarter. So join us if you want to. What are we talking about today? Well, it's going to be a short stream. So I'm going to give you a quick heads up because we're going to be diving into it in far more detail in the main event itself. Dollar is up. So let's have a look at a chart. Let's go straight up to my top side and let's have a little look at what we've got in there. Yep, so we've got the USD JPY. So what are we pointing out? Actually, throughout all this period of weakness for the dollar, that preceded the current strength, of course, throughout this entire period of weakness for the dollar, we didn't really get much headway of weakness on the yen. In other words, the yen only strengthened slightly. And in fact, more recently, since the COVID, this was your spiller, thriller, spike, smash and dash, and then whiplash back up, an absolute trader, widowmaker event. That kind of trade behavior kills retail traders, by the way. Volatility. Most of you want volatility. The real volatility when it comes will absolutely break your money management and you'll get slipped on your stops. You've got to be really careful about that. Key rules to learn. But inside of that event, since then, you've had a kind of falling wedge drift down on the dollar against the yen. So the USD JPY was trading down. Now you've had a major break and it's coming out. You've got the same on the dollar index, the Dixie that we've shown you. I won't be showing you that here. We'll be doing it in the non-farm payrolls and live trading event day in literally an hour and a bit's time. So you can come and see that in far greater detail as we carve it up. So that is the move of the dollar. So the dollar is getting stronger. What's also happened is, in spite of the dollar getting stronger, the oil commodities have moved up as well overnight. So it takes a strong commodity to be still going up, and it's not going up slightly. This is on the weekly chart. This is your week coming into Friday on a very strong dollar spell on both the dollar index against the yen. So we got the dollar gaining ground across most currencies. And what's happening with oil? We've warned you about this. This is the Rockefeller tax. We will be going into far greater detail on this. How do you trade this? Where could you put stops? Should you enter? Should you wait for a pullback? How you'll do it. We'll be dropping to lower time frames for you to be able to see that on your live trading day with us. And most people would have been saying head and shoulders a while ago, especially as the dollar was starting to get stronger. They would have said it over here. Look. Head and shoulders. Problem is, you've broken up. That is the big issue here. So you're breaking up on oil. You're at $65 oil. Remember, it was here not very long ago, a couple of months ago, that we were saying you're going to see 100 plus dollars oil before people really realize what's going down. Imagine what that's going to do in inflation in this depressional environment where people, the NHS staff workers, 1% on offer for inflation. So these highly overworked COVID-19, some of them are dancing, some of them are working hard, we don't really know, but 1% increase. If you are on a wage right now, you are going to be destroyed by the hyperinflationary surge that is coming. You need almost, it's not even a choice anymore, you need to be a long-term retail investor at minimum. You don't have to become a trader, especially not a day trader, especially starting new with all the lessons to learn right now. But you certainly need to become a retail investor in the things that are going to be going up, because your salary is going to be dying. The pounds, the dollars, the everything. This is the big shakeout, guys. We're going to be talking about this on far greater level in the trading day, the live trading day, literally within an hour's time. And you've got to be in it to win it. And I'm afraid it's going to be the big long. You've got to be long a lot of things. We're going to discuss them. Some of them you can trade if you want to learn how to trade. Others you can decide to invest and accumulate on a monthly basis. But if you are not preparing for the destruction of your currency, increasing of taxation. So not only are they going to inflate the currency, which means its buying power is going to devalue. They're going to be doing that to you. They're going to be wrecking your savings. They're also destroying your public pensions that are stuffed in government debt. By the way, get control over that. Get it out of government debt if you can. Self-invested personal pensions, SIPs in the UK, 401ks in America. Get them out of debt. Get control over your own assets and get them out of this devaluing debt. We'll explain the debt and the devaluation and the interest rates, and we'll be looking at those as well in your live trading day coming soon. So the link is going to be shared below. Let's just have a quick squiz on the comments. Francis, my life raft came across this troubled financial ocean. Yes, indeed. It is a troubled financial ocean that we are indeed working. Thank you for the likes, by the way, for a nice early morning. It's not that early, but it's earlier than usual when we stream. So it's nice to have that. We see you guys appreciating the advert 254 of you watching. The shares are doubly appreciated as well. And as I say, full session, after which we're going to then look at Bitcoin and crypto and the alts, and which ones are going to be moving. Can the alts continue to be strong runners? Can Bitcoin continue to make headway if we start to now have a strong dollar? And if you're not in America, should you care if it's a strong dollar? Maybe Bitcoin's going up against the euro, the pound, or wherever you're based. You shouldn't bother too much. You might have a small dollar effect, but will it take some of the investment delight? For the first time, Grayscale Bitcoin Trust is no longer having a premium to the Bitcoin it holds. It's trading 11% below its net asset value. What does that mean? We'll be talking and looking at that chart and all the others later today. So guys, oil is up on a stronger dollar. I'm afraid it's not good news. This is a big, big surge. The non-inflationists are going to get inflationed. This is a very, very serious event. And by the way, if you think it's demand driven in these CV19 times where nobody is flying, nobody is traveling, you're driving less, you're staying home more so that you don't have to wear a face nappy or a chin hammock, I can tell you this much. It's not coming on supreme demand. It's not coming on the demand you had at 2007, just at the peak of the mass affluence boom when your properties were all turning into ATMs that you could refinance. I can tell you we're not at that same level of demand. We're not even at the same level of demand of 2019 September when the repo market began to fail. That's when they wanted to truly get pushing. We had a yield inversion there. We'll discuss the yield inversion, what it means, why they always signal great recessions and depressions, and why it was signaled even before COVID-19 that you were going to have this recession, and how COVID-19 was synchronized to occur roughly on the back of what was an unraveling repo market and a yield inversion. In other words, what is a yield inversion? The long yield, what does it mean? It's a 100% indicator of recessions, and we don't do normal recessions anymore. We do QE fest, emergency life support, depression treatments. And what does it mean? And why you still shouldn't be giving up on gold and silver. All of that coming later today. I look forward to seeing you. This is a short stream just to remind you. Come and catch the full story with us on Friday, recording for 30 days for you to enjoy on how you should be positioning, what investments are currently good, where stop losses could be played for those that wish to trade, and I'll see you on the other side. Links in the description. Shares appreciated. Bye-bye for now. Enjoy your weekends.